Welcome to Big Business This Week. I'm JD Durkin here on the trading floor of the New York Stock Exchange. Another big week down here on Wall Street, to say the least. News of Warren Buffett's retirement, to continue talks on trade between the U.S. and many other countries, plus Disney's earnings, and a new theme park announced. Lots to unpack, and I'm very happy to say a good friend of mine is here to help us do exactly that. Katy Perry is the host of Daily Rip Live at Stocktwits. It's great to have you, Katy. Thanks for being here.
JD, it's awesome to see you, especially this week. I feel like everything's going on, so can't wait to dive on in.
So we've got earnings. We heard from our good friend Jay Powell yesterday. We've got news out of the White House. Let's just take a big step. Talk to me about the biggest stories of the week and kind of things that are top of mind for you and the pals over at Stocktwits on a very busy week like this, Katy.
Yeah, so Stocktwits community, obviously they get very excited about single stocks, but also the macro environment and the bigger topics. I think coming out for last weekend, Warren Buffett stepping down, certainly big news. 60 years, hell of a run. Interesting to see the impact of that share price after the announcement, given that he is 94 years old. So it wasn't that surprising, but a little shakiness there. I think that's a little bit of a sentimental way to start what was kind of a volatile week in the markets, and a lot of people are a little nostalgic about it. I think he comes from an era of this benevolent billionaire that I think has maybe gone away a little bit, and so it was interesting to see him celebrated. I always love watching the coverage coming out of Omaha. I wish I would have gotten to one of those events when he was still running the show, but I think that sort of set the tone for the week, and then a lot of randomness. I feel like we're all over the place. So I don't even know where you want to start, JD. Pick your poison, the policy, the earnings. Even yesterday, Instacart's CEO joining OpenAI. There's just a lot to unpack, so happy to start wherever you want to start.
I'm glad you mentioned the Instacart stuff. We'll get to that in just a second. Let's start with a little bit more of a focus on tariffs and trade policy. At least at the time that you and I are recording this conversation, it's late Thursday morning here on the East Coast. The White House is out there touting this whole can't miss it style trade announcement from the Oval Office. It ends up being with the UK. We are seeing markets respond for the most part favorably in the last hour, currently up about 0.9%. Katy, what do you make of the general theme of tariff uncertainty? You know as well as I do, uncertainty is the new it word of this earnings season, because the White House can say one thing at 10 o'clock and say something else a few hours later.
Yeah, I think it's fascinating I'm kind of on the ground with a lot of retail investors. The fact that we're all revisiting the Smoot-Hawley Act in 2025. If you took AP US history, you thought that was done and dusted. And now the tariff drama is just, it's interesting. It's making us all learn about things we didn't normally need to know about. Even the commentary around potentially tariffing Hollywood, made me dig into why aren't services tariffed? It is a logistical nightmare to do that. What's the impact of that? So I think there's a lot of interesting educational opportunities there for investors, but it is just whiplash. My co-host and I on Stocktwits always like to refer to it as WWF. There's these storylines being teased out. Just last night even, you're never going to guess who we have a tariff deal with. It's a big country. They used to own us. It just feels very bizarre. And then the news comes out and everyone's like, okay. And so we were just talking about it earlier this morning, at what point, with so much hyperbole, I think the market's reacting in the way it should, and that this is the first official deal to be announced. It looks like, I know it just happened, I need to dig in more. It looks like a lot of the details aren't out yet. And I'm just, from a communications perspective, very interested to see how they communicate this out, because it's not just going to be fitting within a Truth Social post. There's going to be layers to it. There's going to be concessions. So it would be really interesting to see the experts unpack what went into that announcement that was made today and what comes next.
I'm really happy you mentioned the Hollywood tariffs, and I'm curious what your response to that was, because there's this suggestion that John Voight was meeting with the president, that they watched the movie Alcatraz, and then Trump starts going, well, we're going to start tariffing films that are made abroad. Katy, well, it's all about the details. We don't know if this is streaming, if it's TV shows, if it's this or that. And you got to think, we as consumers, there's a lot of great stuff that gets made in other places, and it's pretty tough to replicate a film that's taking place in, the streets of Rome and shoot that instead in Secaucus, New Jersey.
Yeah, look, I'm not an expert. I'm not an insider in these conversations. I believe that Donald Trump is somebody who cares about what Tom Cruise thinks about him. And at the end of the day, if Tom Cruise picks up the phone and is like, "Yeah, I need to actually jump out of a plane in Eastern Europe," I feel like he's gonna walk it back. So we'll see. I fully believe, though, the watching westerns on Amazon is something I could actually. That might be the most relatable thing the president and I have in common. It's watching old movies on Amazon on the weekend. But yeah, the services layer. My brain went to how do you even enforce this at a time where you're trying to cut down bureaucracy and personnel in the government? How do you police the flow of services across borders, and what constitutes what kind of service where? I think that sounds like a mess. And again, I think, someone like a Tom Cruise picks up the phone. I don't think he wants any of that smoke.
Fair enough. What are your thoughts on how the market has gone about sort of digesting the broader tariff news? I mean, we go back to April 2nd, so-called Liberation Day. The president didn't want to do it on April Fool's Day. We had these wild sessions of volatility, like historic intraday losses, followed by some historic intraday relief rallies right in line. Now, for the most part, we've kind of evened off from where we were, but it kind of seems like the market has learned a little bit to expect that level of unexpected. And April was quite the wild ride, wasn't it?
Yeah. It seems like a few weeks ago, there was very heightened reaction to anything that was said or stated or posted. And now I think I think people are kind of getting accustomed to the hyperbole, and also the administration's kind of learning to walk stuff back a bit. You even got the post, I think it was 2 days ago, about some sort of earth-shattering announcement that was coming. Quickly thereafter, there was enough follow-up that was like, but it's not trade-related. So I think they're realizing that anything they say it could impact trillions of dollars in the markets, and so they're trying to temper that. And then I think the other way too, people are kind of taking things in stride and seeing that, okay, there's a statement made way over here. It's probably going to come back this way a little bit. But it's all new terrain, and it's fascinating to see just generationally how investors are reacting. I saw a Schwab study come out. Older investors, they're saying this is pretty much the worst vibes they've ever had in the market. But when I see the Gen Z millennial investors, they're excited about it. They feel like this is the time to find winners and see who's actually succeeding in this environment, and they're hyped. So it's just a weird time to be where you sit, especially JD.
Well, yeah, exactly. And, we have these days here at the New York Stock Exchange where pretty regularly we are clearing $1 billion or 1 billion total shares in volume into the close, which is great for the market makers, great for the community. It's just those big intraday 2% swings of volatility. And it's kind of like buckle up and wait to see where the roller coaster's going next. And I think there's been a lot of sessions where you feel like you're on a roller coaster and there is no seatbelt for sure. And so we will see how these trade deals play themselves out, and of course what they mean for all the stocks that trade publicly, especially those Magnificent Seven. Let me get your take on what we heard from Mr. Powell, our good friend Jay, yesterday, holding rates steady. He did flag the risk of higher inflation and unemployment, but overall here, Katie, it kind of seems like the Fed is sort of wait-and-see mode because there's so much we don't know about the impact of tariffs on inflation, the impact of unemployment. Do we learn anything really big from the Fed this week?
I don't think so, JD. I think it was sort of, I think it was a 0% chance of a rate change that people were expecting going in. I was joking with my co-host yesterday. It would be funny if Powell was just like, you know what, screw it. I'm just going to change it now and just watch for the reaction. I mean, that would have been hilarious. But yeah, I think he's just riding it out a little bit. And we'll see there. We'll see what happens in June. I know there's a slightly higher chance of movement in June. And it is interesting to see kind of how the U.S. is managing this versus the ECB and what they're doing over there, which is a very different approach.
Yeah, it definitely is. I wonder to what degree you're following, and I like these conversations a lot because we have hard data, right? We got the employment figures, the GDP figures, all the official buttoned up stuff. And then we get the soft data. And these are the vibes, right? These are sentiment surveys. These go to consumers. These goes to business owners and producers. And we ask them all these questions like, how do you feel about things right now? And then maybe even more importantly, where do you think things are going to go? And Katie, there's this really big separation right now between the hard data and the soft data. What do you see when you look at consumer sentiment surveys and kind of the vibes, to use that word, about where the business community is kind of going? Because there's a lot of skepticism out there.
Yeah, on the consumer side, it's kind of schizophrenic from what I see. I see people saying they're worried about the economy, and then I think it's 40-50% of people who went to Coachella BNPL'd it. And then you see people saying, I'm not going to spend as much, and then you see auto sales front-running tariffs, people rushing to buy a car before they're more expensive. That seems very counterintuitive, and so it seems all over the place. It seems like nobody can really make sense of what's going on, and it also seems like, as is the case with most kinds of data, there's so many nuances, there's so many layers to it when you cut by, demo, region, it varies. And so I think that's what you're seeing every other day, and I love these polls. They're fascinating to me. I eat them up. But they're all over the place. People say one thing, they do another thing, and then you see, you'll have one report about people not being scared to even look for another job, and then you'll get a report that the job market's doing fine. And it's hard to make sense of it all in aggregate. I think it's important to follow these things, but not take any of them too seriously on their own.
I always tell friends of mine and family, don't get too caught up in the news day to day, because you'll drive yourself nuts. Let us do that. I feel like that's what nerds, respectfully, like you and I do. We have to live this stuff in part because we love it. But otherwise, I tell the average person, don't get too caught up on, you see a big scary headline. There's always additional context.
Yeah.
You mentioned buy now, pay later. Bit of a personal question. Do you use buy now, pay later for anything? I don't personally, but I admit I definitely see the appeal, especially for a Coachella going crowd that wants to say, all right, I want to use a service like a Klarna or one of these other services because I don't want to pay the bulk right now.
I certainly get the appeal of it. The way I see it is a technology layer that turns anything into a subscription, essentially. So big ticket items. I think about even just a family, you have a dog and there's an accident on the couch. It's $1,000. That's a great solution for somebody who needs to make a big ticket item and they're going to use it over time. Personally, I've used it, I think, a couple times for trips when I've booked a nicer hotel if my sister and I were traveling and I didn't want to take the hit all at once. But this is, if you look at the data, this is a growing, Gen Z, this is how they buy everything. They rarely buy anything in full. And I think we have a firm reporting earnings after the closing bell here this week. And I got a chance to sit down with their CFO and talk to him for a bit a couple months ago and just get their perspective on, is a bad economic situation good for them because people are less likely to put all the money down, or is it bad because they struggle to pay these back? And there has been data coming out showing people are falling behind on these BNPL payments. That's a whole other, I read the pros and cons debates of these. I don't know where I land on it. I do see value in some of these use cases, though, as I said, and basically subscriptionifying anything that you could want to in life, because you can use them for anything now.
I hadn't really planned to get into it, but you bring up an interesting point, which is that this can be a generational split, right? I think sort of, in theory, older generations of savers and investors are less likely to gravitate towards some of these new options. But I could see a Gen Z, I could see a different generation having a different relationship with money. You've lived through different economic crises in your formative years, either wrapped around high school or college. What are other trends that you see or you think are really interesting, especially given a divide between younger investors or younger American consumers versus older spenders and consumers?
Yeah, I think the big one, which I touched on, is just the normalcy of subscriptions. Owning a piece of everything on a monthly basis, if you think about how normalized that is for younger people versus older generations. I got a chance to interview Robinhood CEO Vlad Tenev last week, and we were talking about the American dream and talking about how it's so different now. It used to be, I'm going to own this physical home on this piece of land, and it's going to be in my family forever, and I'm going to have a dog, and it's just different now. People now, the way he sees it, he wants to build an ecosystem where you're managing a portfolio. Maybe you own part of a sports team. Maybe you own some ETFs. Maybe you own part of a collectible. All that in aggregate within this app represents your nest egg or your ownership as a concept is so different. And I think so you're seeing with a lot of what's going on with the housing market and just the divide, it seems like wild to me, both by demo and I also think by just time. I think I saw someone make a very astute observation about just like the line of demarcation from the 2010s to the 2020s and how everything just got so different after that. It was like, boom, we had COVID. And so, there's a lot there. I think there is this fragmentation, and it goes to like these companies wanting to tokenize everything. Everything is fragmented, everything is accessible, but that makes, it spreads it across so many places. It doesn't feel like you really own anything at the end of the day. And I think people struggle with that.
And it's really interesting because I think Gen Z or younger investors, millennials, whoever it may be, probably more likely to gravitate towards investments, maybe on platforms like Robinhood, not just the Mag 7 stocks and the household splashy pro-growth stocks, but maybe a bit more of a crypto-savvy crowd, maybe a pro-meme stock crowd. And to tie this conversation back into where we started, with the truly legendary Oracle of Omaha, right? Who builds this generational wealth. Yes, we know he added Apple at some point, but you're talking names like Chevron, Coca-Cola, and just regularly adding in those averages with patience, fundamentals, and discipline. Not chasing the hype, not chasing the shiny thing. Do you think there's something to be learned there for younger investors to look at the 94-year-old Warren Buffett and say, hey, you know, I may like the meme stocks, I may like the little knee-jerk reactions, but there's got to be something to be said about the long-term fundamentals that I'd imagine don't really change generation to generation when you're dealing with equities in the market.
Yeah, I mean, Gen Z, the younger people, they like their screenshots. They like throwing those up. Look at the scoreboard with him, 20%, I think, annual returns over the course of his tenure. That is insane. And I do think there is something, he's a part of a bygone era, but I think it's something that we should all look to in that the consistency, the diligence, the conviction he had, and also just kind of how he's, at least as it's reported, how he's lived his life. And what it gets to is, I think you see like these meme trader stereotypes in crypto. I think we all got a little bit of degen in all of us. I fire up DraftKings in the fourth quarter of the Knicks game, whatever. But, I'm a VU girl. Like, I have, like, index funds. I think we all got a little bit of that dog in us. Wow. But we can all maybe be a little more like Warren, too, and it's all about a nice, healthy balance.
VU girl? I've never heard VU girl.
Not a VU girl, a VU girl.
No, a VU girl. That's awesome.
Yeah. That's what I am,
That is, I absolutely love that. So it's an interesting kind of dynamic as the conversation flowed along. Okay, before I let you go, I do want to get your take on Disney earnings. We had a huge gap up coming off, and obviously it's a really interesting play between parks and entertainment, streaming, the advertising business. I would argue there's really no other company that really has that unique three-legged stool quite like Disney. What did you make out of anything we heard from the company? In particular, hey, we got a new theme park coming. That's pretty cool.
Yeah, Abu Dhabi. So fun fact, I've never been to a Disney property in my life. Never.
That is a fun fact.
And now it's too late now. I can't go as like a single adult and just hang out at Disney. That's weird. But I do. The parks thing was interesting, going back to what you were saying about sentiment and these polls. Like, I think it's $170 for a children's pass, the parks, and the parks are ripping. So again, like, I don't know, this could also be part of that trend where people who do have money are spending it more so. And so it's this sort of, people are tightening the belt, but if you got a little extra money, you're YOLOing it. I don't know, that surprised me. Streaming numbers also came in stronger than expected on Disney Plus. So yeah, they had a good readout, which I think people were not expecting that.
What do you make of how Disney Plus, this could be from a kind of financials, markets perspective, or as an individual user, the Disney Plus streaming offerings in this world where Netflix has changed everything, and there are so many now crowded voices, and the major studios they're all trying to go after a very tough space in streaming. You add Amazon Prime to the mix, you add Paramount Plus to the mix, fill in the blank here with the next one. do you feel like Disney Plus is doing relative to all that streaming competition?
Yeah, I think I'm not deep in this, but I think from what I see, Disney's moat is really its IP. Netflix is a tech company, the algorithm. I think they just announced today OpenAI. They're testing some sort of OpenAI thing in the interface. They're a tech company that does content. Disney is a content company, and that's Disney's strength. So I think it's interesting to put those two side by side. And then also think about the sports layer on all of this is also a fascinating thing to think about when you think about Disney's got, I think the one piece of their business that wasn't doing so hot was sports, ESPN, and that's a whole other can of worms for all these companies.
Yeah, well, at least for sports right now, those New York Knicks, a
Bing
surprising
bong.
2-0 lead. Bing bong, absolutely.
Let's go.
Let's hope this interview ages well and they can take care of business back in New York this weekend. Katie, I could do this conversation with you for at least an hour. Unfortunately, that's all the time we have. I hope you will come back to Big Business this week. You're one of our favorites. That's Katie Perry. She's the host of Daily Rip Live at Stocktwits. Katie, enjoy your time out west. Thanks for being here.
Thanks, JD. Go Knicks.